Good morning and welcome to this Wednesday, November 13th edition of Trading Places Live at EarningsBeats.com. I'm Tom Bowley, Chief Market Strategist here at EarningsBeats.com, and I'll be your host for the next 30 minutes featuring everything you need to know as you prepare for the trading day ahead. Let's take a look first at what is going on in the market. Actually, Chris, I can't share the screen, so I think you need to, there we go. Let's try this again. All right, let's get going here. We got, first thing I thought it was kind of interesting when you look at the Dow Jones yesterday, completely flat, 0.00 points. First time in 5.5 years. Not really sure if that matters for anything, but just thought I'd point it out. Anyway, flat on the Dow, S&P 500, and really across the board, not really much happening. S&P up about 5 points. You can see went up over 3,100 though for the first time in history before pulling back. Talked about negative divergences. I'll show you those on the 60-minute charts here in just a couple minutes. But I think the market's just consolidating here. Futures are down a bit today. I think when I looked earlier, Dow futures are down close to 100. Not surprising at all, really, in my opinion. And again, we'll look at that 60-minute negative divergence in just a minute. NASDAQ was the leader yesterday, rose about 0.25%. Did go up above 8,500 for the first time ever, but closed at 84.86. Small cap 600, still struggling a little bit more. We've seen the major indices kind of inching their way higher the past week or two, and you can see the small cap struggling a little bit. But we did get through a key area at 980 on the short term. And if you stretch this SML chart out longer term, you'll see that 990 up to about 1,000 has been a very, very difficult area to get through. That is not the all-time high, but it has been a very critical area of resistance over the intermediate term. 10-year Treasury yield currently, well, actually, let me get an update on that. It was down 3 basis points earlier. It is still down 3 basis points, 1.88%. So we are back below that 1.90% breakout here. I would watch that rising 20-day moving average, though. I think as long as that holds, I think this whole theme of rising Treasury yields, relative strength in financials and industrials, I think that whole theme continues. But I'd watch the 20-day, see if that holds. As far as some of the individual sectors go, healthcare had a pretty nice day yesterday. Has been strong really since the beginning of October. Nice move up, breaking above prior resistance over the summer at about that 92, 93 area. And yesterday actually closed back up above the where we were at the beginning of November. Materials also having a very strong 4 to 5 weeks. Beautiful move up, breaking out to a new high yesterday. Meanwhile, your defensive, all the defensive areas have really struggled. But real estate, you can see past 2 to 3 weeks really weak, moving back down. Now down at lows we had not seen since back in mid-August. But that is not surprising when you've got a market that's breaking out. It's actually a very good sign. We want money rotating away from defense and into offense. Energy struggling a little bit after having a pretty nice move to open up November. We've pulled back a little bit, still holding that rising 20-day moving average. That's probably where I would watch to see if we can continue to hold. As far as individual groups yesterday, medical supplies within the healthcare group, when you look at the industry groups, there really weren't many that had a big day one way or the other. It was pretty much flat all the way around. But medical supplies was up about 1.5%. Volume's been coming in on this push to the upside. I'll talk about medical supplies a little bit more in just a minute. Let's move on to the 10-year Treasury yield, which I just mentioned, is down 3 basis points today. We had an economic report out this morning. October CPI at 8:30 this morning came in a little bit hotter than expected. I think that's what the Fed likes. The Fed wants. We'd like to see a little bit more push to the upside in inflation because inflation has remained below that target level of 2%. And this 0.4% rise this morning was better than the 0.3% rise that was anticipated. Well, I say better than expected, depending on how you look at it. It was higher than expected. Core CPI, however, rose 0.2%, exactly as expected. Tomorrow, we will get inflation at the producer level. 0.3% rise is expected. Core PPI, 0.2% rise expected. All right, I'm going to go ahead and let's look at me go ahead and pull this up. I want to show you these 60-minute charts. So let's start off with the S&P 500. First of all, if you go back and you look at history, and you can look at some of these signals just to see they're not going to work every time. So don't think that they're absolute guarantees, but they're warning signals. They're short-term warning signals when I see negative divergences. If you go back into October, you can see the S&P 500 broke out on a 60-minute chart, but the PPO never confirmed that. We never got a higher high on the PPO. And the problem is you get, a nice push to the upside and you get a little bit of momentum going. It's okay to have a period of profit taking. And sometimes that occurs after you get these negative divergences. So higher prices, lower PPO is what you're looking for. And again, it doesn't mean that we're going into a bear market or it's something horrible. It just means a lot of times that the market will pause. And we saw that here. We actually broke out one more time, October 17th. And once again, the PPO was lower. The 20-period moving average, this 20-hour moving average had been holding, but we ended up going back down to the 50. We got close. Actually, eventually, we got very close to the center line on the PPO. And then it's like, okay, now it's refresh. Now we can start that advance all over again. And that's what we did. We started moving up. Here, actually, there was there was a negative divergence here on this breakout, late October. Pushed to new highs. Look where the PPO is, lower, negative divergence. Where do we go? Back down to the 50, back down close to the PPO center line, and then off we move again. Well, these last couple of highs that we've had, you can see the PPO has been lower. So the fact that we've struggled yesterday after getting above 3,100, and we've got futures down this morning, really shouldn't be that big a deal. And furthermore, you've got these negative divergences right now across all the major indices. Here's the Dow. So the Dow back on November 7th, when it pushed to new highs, PPO did not quite make it. We move on to the NASDAQ. Higher highs, lower PPOs. Even the small cap, which hasn't broken out, like I said, in recent days, but it did break out on the 7th, and you can see the PPO was declining. Let's see, what else do we have? How about the mid-cap? Mid-cap index, higher highs, lower PPO, sideways consolidation. Sectors, XLK, higher highs, lower PPOs. I mean, it's across the board. So I wouldn't be too upset about the market pulling back here in the near term. And in fact, I would kind of expect it. As far as strength yesterday, we talked about medical supplies. I have a relative strength industry group chart list that I like to use. All it is just all of the industry groups relative to the S&P 500. So for instance, let's see, if I go in here, I can go all the way back to the very first one. I can go through and look at every one of these. I have it set up for a 3-year, a 2-year weekly, no, 3-year. Actually, what is this? 3-year. Yeah, 3-year weekly relative strength. So it's just giving you an idea of how all these different groups have been performing relative to the S&P 500. So I could go through each one of these and take a look. And there's semiconductors, which obviously have been on quite a roll here of late. But when I get this, one of the things I do, rather than go through the industry summary on stock charts, is I go through my chart list and I can click on that. Make sure you understood where I went here. I just clicked on this view all. And when I click on that, then I can view the list as a summary. So this lists all 104. And then it may come up as, in some other order, but if you click on this percentage change column, you can see what was the worst performing areas and what was the best. And I think that's pretty important to be able to see each day. And then I can go back. I can say, okay, well, what about the last week? Well, the last week, automobiles have been the strongest. If I go back the last month, furnishings has been the strongest. What about, year to date? Energy, renewable energy, still holding on to that lead, even though it's been really rough lately. Computer hardware getting ready to take the lead, though. Computer hardware been much stronger. So anyway, just wanted to point that out because it is an easy way to see what's leading. So yesterday, medical supplies were leading. So I thought, okay, let's take a look at some of those individual stocks. I went in and looked at them. I just want to share a few of these that had pretty good days yesterday and I think look very strong going forward. The first one, this is a small cap stock, Natera, NTRA, beautiful uptrend in play. Believe this was earnings related here. Stock has been in this nice uptrend, and you can see with its earnings reports for the most part, been moving higher throughout. So NTRI continues to look strong. ICUI, this is ICU Medical. I talked about this one on the show yesterday over at Stock Charts TV. Had the gap up, and I said I wouldn't be surprised if we pulled back, but if we could move back up and take out the open, I would be very bullish because there wasn't a whole lot of room, or there wasn't a whole lot of resistance until we got all the way back up to this 210, 212 area of resistance. That was the double bottom breakdown on that heavy volume gap. But we gapped up, put in a black candle off this uptrend. I don't know. We might see a little bit of downside action. I think the gap support here and that rising 20-day could be very interesting on a pullback. A move through the open of 186 yesterday, I think would be bullish to the upside. So those are two areas that I would look for there. Now, this has been a downtrending stock. When you look at it on a relative basis, it's been horrible, but it has broken to a 3-month relative high to its peers. Volume came in. We've got new data now, new information, earnings report. They beat top and bottom line. This is a stock I think you want to keep an eye on. Larger cap, Edwards Lifesciences. This one has been a really nice winner. Each time we've seen these gap ups on earnings, and then we'll come down temporarily and then right back up again. Watch for a breakout above 240 here. I think Edwards Lifesciences looks good. Relative strength, you can see it's one of the leaders in the medical supply area. Final one I wanted to show you was ConMed, CNMD. Look at the volume coming in on the gap up with earnings. Nice little move here. Had triple top around 103, gapped up, came back down to about 104, and then moved back higher. Now currently trading at 112. This one does trade a little bit less volume than I like from time to time. So if that's a consideration for you, pay attention to that. But you can see that ConMed broke out to a new 52-week relative high to its medical supplies peers. All right, let's see. Next up, let's go with, let's go into some earnings reports. And we got a bunch of them. I'll go through as many as I can get through here. Skyworks Solutions, beautiful move up here recently on volume. The stock is down in pre-market. And let me just tell you that these pre-market prices that I'm going to be telling you, I probably got about an hour ago. So they may have changed. There's not a lot of liquidity sometimes in these pre-market bids and asks, so they can change pretty quickly. But I think this is going to be a perfect example of buy on the rumor, sell on the news. SWKS, they beat on their top line. They beat on their bottom line. They guided Q1 earnings per share higher. The stock's down 6% in pre-market. This is a huge move up. I would have banked on a good report. That doesn't always translate into a good reaction in the market, but I would have banked on a good report because there's a lot of accumulation taking place on the stock ahead of its earnings report. Why would that happen? Well, Wall Street sends their analysts out. They take a look at the company. They talk to management. They find out what's going on in terms of their product pipeline. They find out about their competition. Is their stuff selling? What do their margins look like? They find out all this information. They go back to their office and they're buying for themselves and for their clients. So when you see this relative strength like this coming up, getting close to a 52-week high in a hot group to begin with, which semiconductors certainly have been, I think that leads to what I would have expected to be a good report. They got the report, but the negative reaction, buy on rumor, sell on news. I think this one's going to probably reverse down here in this gap support somewhere. Maybe an outside chance it goes down to the 50, but I think probably somewhere in the low 90s, low to mid 90s. Let's see where it opens today. If it opens above 95, my guess is it's going to close above 95. It probably would be a buy. I like to see a stock trade for a couple of days after its earnings report. First day, sometimes you get some head fakes, but usually after the first couple of days, you get a pretty good sense of a stock with its earnings report. So anyhow, Skyworks, pretty nice report there. DDOG, DDOG, which is Datadog, hasn't been out very long. Stock's been going mostly lower, but they came out with their first earnings report as a public company and really knocked it out of the ballpark. Easy beat on the top line, 95.9 million versus 84.67 million. They were flat. Their earnings per share, 0. The market was expecting a loss of 14 cents. And then they guided quarter four revenues and earnings per share higher. Stock is up 12%. So it is probably going to be somewhere up around this 38 area, 38, 39. We'll see where it opens. But this is a stock in the software space. Hadn't been doing very well relative to the group. You can see software trying to make another breakout, but should be a strong day today for Datadog. ADT is up almost 5% this morning. They beat on their top line. They did miss on the bottom line, though. Stock has been up quite a bit, up against major resistance. We'll see if that translates here into a breakout and whether we can hold it. A close above 8.25, I'd have to say, would be pretty bullish, even though the company did miss on its earnings. Why? That's probably what the Bears are asking this morning. Why? Beat on the top line, beat on the bottom line. Stock up 3.75% after hours or this morning. And it did start to show some pretty nice action here just recently. Looked like it bottomed back in August. Move up, put in a higher low, just recently put in a higher high. Nice volume trends and coming off of the bottom in terms of relative strength heading into this report. Let me give you a couple of others significant. TWOU, this is going to be a good one today. They did beat on their top line, beat on their bottom line, guided fiscal year 19 revenues higher. The stock, after a huge gap down back in July, has been moving straight back up. You can see that the relative strength, even though it is down near the lows, has been moving higher for the last 3 months. The stock is up 13.79% in pre-market. Now that it's up into this gap zone, I have a feeling we're probably going to move back up toward that 35 level in time, and then we'll see whether or not we can get through. But there's still a lot of ground to make up to the upside. Perhaps the best report of the day, and one of the best reports of the earnings season came out last night with Cardlytics. This is an internet company, CDLX. Revenues, 56.4 million versus 50 million. So a nice beat on their top line. Bottom line, turned a profit, 3 cents. Market was expecting a loss of 14 cents. They went on to guide quarter four and fiscal year 19 revenues higher. Stock is up 24% in pre-market action. Probably, and you can see the last couple of earnings reports, big moves up on heavy volume. I wouldn't be surprised to see a black candle go in today. I mean, this stock's come up a lot. It was 14 and change back in April. It's going to open up close to 50 today. My guess is that maybe after the gap up and an early push, maybe we'll get a little bit of selling. Remember, market makers are on the other side of the trade. So when everybody wants to buy at 50, you've got market makers playing against you. So I think the odds are better that after the open, we'll see a pullback. But that doesn't change this fact that this is a really nice stock. This is one I've been talking about. I think I mentioned it in the daily market report recently. A huge move up, CDLX, relative to the internet stocks. Really looks good. All right. Let's see. This morning, we had MTOR. This is going to be one on the flip side, not looking so good. MTOR, been going sideways here for quite some time on a relative basis. Did pick up over the last 5 or 6 weeks. Still down quite a bit from its 52-week high back at the end of July. The stock reported revenues of $1.03 billion. Market looking for $1.06 billion. They did beat on their bottom line, 83 cents versus 68, but they guided fiscal year 20 revenues and earnings per share lower. Pretty surprising to me. I mean, with this relative strength coming up and the volume coming in, I don't know, maybe Wall Street was getting a whiff of the bottom line beat, and maybe there was nothing said about the, going forward with revenues and earnings per share. But this is going to be a little bit of surprise. Stock down 14.5% this morning in pre-market. We'll see whether or not that holds. One other company that is struggling today, and this is in the semi group. We haven't seen a whole lot of this, but the semis, and this could be another one of those cases of buy on rumor, sell on the news. The stock beat on the top line barely. And when I say barely, I mean barely. 312.10 million versus 312.05 million. So not a whole lot of difference there. Bottom line, 25 cents versus 24 cents. The big thing, though, they guided their quarter four revenues lower. And as a result, stock down 8% pre-market action. which will take it probably somewhere back down around this 21 level, maybe just a little bit below it. There's some support that comes in at about 2075, and you got your 50-day at 2086. I'd watch that level pretty closely. There are a lot of opportunities in semiconductors. If this one breaks down, you want to be careful. Okay, let's move on. Let's go into upgrades and downgrades. First upgrade, FIVN. This is 59 Inc. This is in the software space. I think this stock actually has held up pretty darn well relative to the software. And I know I said software is getting ready to break out, but keep in mind, a lot of this is based on the fact that Microsoft has been so strong. A lot of the other software stocks that had, the aggressive growers had really been beaten down. They're starting to come back, some of them more than others. FIVN, I think, held up better than most. After gapping up with earnings back in August, you can see the bottom of gap support was never even tested, and we've started to turn back up again. Here, the stock upgraded. I tend to agree with this upgrade. I think this is a nice looking stock. Close above 65 would be bullish. Upgrade on Rockwell Automation. Completely agree with this one. Now, with that reaction yesterday, the huge gap up was positive, but that black candle is a little bit negative. If we go below yesterday's low, keep in mind we're getting upgraded this morning. If we go below yesterday's low at 196.34, I think we stand a better chance of coming back down first to price support around 187. Then you've got gap support all the way down at 179. But this is a stock that has really jumped now relative to the industrial machinery group versus its peers. And industrial machinery, I've talked about this recently, really starting to show some strength. So I like the stock, and it's one I'd keep on my watch list, but wait for a better opportunity. Maybe with today's upgrade, it may gap up and then pull back, create some opportunities down the road. All right, then we've got G3 or GIII Apparel Group upgraded. I don't know about this one. It's starting to show a little relative strength, but it's still in this longer term downtrend. Nice volume coming in here in September. So what you're hoping is that this is a character change on the chart from a downtrend to an uptrend. It's certainly been trying to do that. I'll be more impressed on a close above about 30.50. So let's see if we can get through on this upgrade. Otherwise, maybe the better reward to risk chance on the long side would be down around that 20-day moving average. Downgrades, DHI. This is DR Horton in the home construction space. Gapped up yesterday with earnings, made the breakout, and today getting downgraded. I don't know about the downgrade. I do think that home construction, unless we have a longer period of falling treasury yields, I think home construction could be under a little bit of pressure as a group, which we've really seen here over the past 3 weeks. Beautiful move up on an absolute basis, almost straight up. And now it's been pausing and consolidating. But we've got DR Horton moving up to new highs, which means nice relative strength. I don't know about the downgrade. Anything back down in the low 50s to me, I think is a buy. Next up, ELF. Beautiful move up yesterday. This was a gap up on earnings, came down, had a nice rally yesterday, volume picking up. Today gets downgraded. I don't know. This is a stock breaking out to a new 52-week high relative to the personal products group. I think any kind of a pullback here actually is a buy. I don't agree with the downgrade. And the last one, last downgrade here, Murphy Oil. Murphy Oil downgraded. Well, we do have multiple tops coming across here at 25. Look at the volume coming in to push this one up to 25. The downgrade, maybe some upcoming weakness could take us to the 20-day moving average, but I think this stock looks better right now than it has in quite some time. Looks like we bottomed in August. The big gap up with heavy volume in September looks like it broke the downtrend. We put in a higher low, and now we're coming back up. If we break above this 25 level, I would view that to be very bullish. And you can see Murphy Oil relative to its oil peers here at about a 5.5-month relative high. So the stock is starting to show relative strength. To me, it's starting to show a sign of an uptrend versus a downtrend. Breakout above 25 would confirm that. And I like the volume coming in on the move to the upside. So I don't know about that downgrade either. I think longer term, it's still got a few issues, but short term, it's showing some pretty good positive technical strength. So I'm going to say I disagree with the downgrade. We'll see. I think that rising 20-day holds and we get a breakout down the road. All right, to end this, we'll get into the three you must see. But what I did, and I'm going to show you how I did this on stock charts. I went into the predefined scans. So a lot of times when you look for breakouts, if you're not familiar with the site or you just haven't gone, maybe you've been a member for a while at stock charts and you just haven't looked around. If you go down on your dashboard and make sure you have this gear up here checked for your scans and alerts. But if that box is checked right there, you'll see somewhere down here, your scans. And if you click on this more, here's all your own saved scans. But if you go in the more here, you can see predefined scans. And there's other ways to get the predefined scans as well, but this is one. Then 52-week highs. I mean, that's simple enough. I'm looking for a breakout. Going through the 52-week high list certainly would work. So here you've got the 52-week highs. I'm going to sort it in scooter order. And you can then go down the list and find the top scooters. You could go down and find maybe some stocks. Microsoft only has a 75 scooter, but it hits a 52-week high. There it is, breaking out. Well, the fact that the scooter is only at 75 tells me that it's probably not way overbought. And I think if you look at this chart, it tells you that. Sideways consolidation, broke out here with earnings and is now moving higher. Microsoft looks really good to me still. All right, but I went through and picked a few other stocks in here, and those are going to be the ones that I use for the three you must see today. So the first one I want to pull up is Dexcom, DXCM. Now, first of all, this is in the medical supplies group. Talked about medical supplies earlier. Look at this volume on the earnings breakout with Dexcom. Huge move up, 185. It opens and keeps moving up. Remember I said earlier, I like to see how a stock trades for a few days after earnings. Remember when everybody is wanting to get in after earnings, everybody puts their market buy order in at 185 because that's what a lot of traders do. They get very emotional. Oh, it's a great earnings report. I'm going to buy. I just want to buy at the open. Usually market makers on the other side, and as a result, we see gap fills, or at least we see temporary move back to the downside. In the case of Dexcom, we didn't see that. Next few days, volume's still strong, and we keep going higher. That tells me there's a lot of accumulation taking place in a stock. When it's got the heaviest volume of the year and it gaps up and market makers can't get control of the action, to me, it's almost like a runaway train. I think that this is a stock that you want to keep on your list. I don't want to chase it at 205, but now instead of expecting a move back down to 152 to fill that gap, I'm thinking the top of gap support is where I want to buy. So now on a pullback to 185, you might say, well, why didn't you just buy it there to begin with and you wouldn't have to wait for the pullback? Well, you don't know it's going to be this kind of reaction. That's why I said, for me anyway, I need to see the reaction after earnings. If I get that kind of a reaction to the upside, that tells me there's a lot of accumulation, and buyers in droves were buying at 185. If I can get this stock back down somewhere down the road at 185, I think that's a buy. Next up is KOD, and I just want to bring this one up because to me it looks like a reversal. I'm going to go to a regular chart here on KOD daily and check out as it's been moving up. The PPO was fine here. We pulled back, got close to the center line. We're going up with price. That looks good. We get to this high versus that one. Yep, PPO is slightly higher. We're still good. Sideways consolidate. We bounce off the 20-day. Everything's good. Right here, we break out day before yesterday. And look at the PPO. It's down. And then yesterday, put in a reversing candle. A lot of people say, Tom, when's a good time to sell a stock? Well, right here, if I own this stock, I'd have been out yesterday. I don't like that reversal with a negative divergence. Does that guarantee us that it's going lower? No, it does not. The stock might be up $4 today. I don't know what it's going to do, but that is a warning sign to me. And when I see a negative divergence with a reversing candle, I immediately think 50-day moving average and center line support. 50-day moving average is down at 1751. It's at 2186. Now, would I short it? No, I'm in a secular bull market. I don't short anything. But if I'm looking to maybe move my capital somewhere else, I think this one looks pretty good. Last stock I just wanted to mention was APPS. This is in my aggressive portfolio at EarningsBeats, and you can see the breakout here above 75 yesterday. Look at the volume coming in. This stock right here measures up another $1.75 from the breakout. I think it's going to 950. Anyhow, that is it for today. Want to thank everybody for stopping by. Appreciate you coming in, and we will be back with another Trading Places Live here at EarningsBeats next Monday. See you then, everybody. Happy trading.